In this video, we're taking a look at a trade I just took for close to $7,000. I'm going to break down how I found the trade, how I built the narrative, how I executed it, and how I ran it through to targets. Let's get to it. Every trade needs a narrative. We're beginning on the weekly time frame, which is where I begin with pretty much every setup. What I do here is break down multiple areas that the market can potentially lead into and get an idea for the overall bias. This then sets me up with my trading opportunities. I broke this down in a video recently. I'll put a card in the corner linking to a narrative video so you can go check that out. What we have here is on the weekly time frame, lots of bullish rejections. We're seeing every attempt to push lower was pushed back at by sellers, which drives the market higher. I had the idea that the market was going to take out this high, which obviously this week we've seen it do. Now this leads me into, at this point in time, before FOMC, before any big data had come out, understanding that this market was therefore likely to continue moving bullish. If we look to the left over here, this is something big that I do just to check for areas of interest. We have a supply zone up here. Okay, this is weekly, so we're not expecting to get there just yet, but building out this narrative gives us what we need to take trades in the short term as well. And we have some equal high liquidity. This is very high probability of being taken out. So what I was looking for from the weekly perspective then, after seeing this break, would be a pullback down towards pretty much this area of demand on the daily time frame or weekly, and then a continuation higher to take out these equal highs with then a potential continuation towards the next area of supply as well. So that was the big picture bias. Now dropping down to the daily time frame, we can see we had a very nice strong closure above this high, which again backs this buying idea. We can get rid of this. This was just indicating the strength, but essentially what we're now looking at is for the market to make pullbacks towards this area of demand. So we have an idea that if we think the market's going to get into here and then buy higher, well, this is quite a large range. And if we get potential to do so, we may be able to sell through some of this and capture a trading opportunity. 4-hour time frame, we can see the market has impulse to the upside. We can refine our demand down. We have this area here. And then we have another area of interest just here. These are going to be our 2 4-hour zones to potentially trade towards. Basically, in this idea, right, we are bullish. We had a strong bullish closure. We want to buy. These are the potential buying areas. But we've got a big impulse. We can trade through this. So that's where this current trade is looking for, essentially counter trend against the strong momentum if we are given the right confluences. So I call this a conditional setup. Now down on the 4-hour then, we're well aware we've just swept a high or closed above a high, which is good. We've then created this small confined range from pretty much this low through to this high. So at this point, I sent out the opportunity because essentially I treat the Insights channel. If you want to get all my analysis, by the way, you can do that in the Insights channel. I sent out this opportunity or journaled this idea that essentially if we take out this high and we come down under this low, I will then be looking to sell pullbacks, because what this would do is create what I call a standard confirmation, which is where the market narrative is shifting from bullish to bearish, and we can join the start of that bearish trend to trade down in the short to medium term towards our area of interest. So the setup I gathered is conditionally, if we break this high, only if we break this high, then we come beneath this low. What we've actually done there is create a higher high and then a lower low underneath this higher low, which then opens doors to selling a pullback like that. And that becomes the trade idea. So that's the conditional setup. Of course, conditions have to be met for this to become valid. Otherwise, no trade will be taken. If the market had just melted immediately, then that would have been no sell for me, but we could have led into buys when the market got there. So from this point, simple stuff, moving to the hourly time frame and below for our executions. Now, we see during the FOMC, a very big data point for the US, we had this massive sweep, this liquidation, which pushed us towards those equal highs, potentially opening doors to further upside, but then resulted in an immediate sell back to the downside with closures underneath the range. These closures are what we want to see because this indicates that the trend has confirmed a shift in this direction. So now we have all of this pattern up to this point. We've had the sweep, the pull lower, and we've confirmed downside with a closure. So what we're looking for at this point is simply an opportunity to sell the market on pullbacks. Now what we would do for this is go down to the 30-minute time frame. Here we can identify open imbalance supply. Supply zone is where I'm going to be selling from. And a supply zone is simply a consolidation candle or a sideways indecision candle before an impulsive move. Well, we have an impulse here, then we have this bit of indecision, this blue candle, then we have another impulse there. So this is going to be our supply zone. That's a 30-minute supply. Here as well, we see just how clear this higher high, higher high, lower low formation is. So we pretty much have that validation of everything we want to see now to lead into this short. At this point, in order to refine the entry, because I'm not too happy with this risk reward, okay, what we can do is go lower. I went down to the 10 and then the 5-minute, we'll go down to the 5, and you will see that we can refine this supply zone down to just a small supply zone here. This is the what we would call the extreme in this leg of price movement. So we have this impulse down, and the highest supply, which is classified as the extreme, is all the way up here. This is going to be basically the final point the market could potentially reverse from before it starts to break back into this higher internal range. We have imbalance too, just to show that. Imbalance is simply an open price range or a gap where there is a supply and then an open range that hasn't been retested yet. So we have imbalance, we have our supply zone, and that is where our execution can be taken from. So what we can do is place our entry there, stop loss above that high, because if the market gets over this high of this supply zone, right, this is then efficient. We'd expect the market to continue through to take out this high. So there's actually no point putting the stop loss there, because if this supply zone breaks at all, it's likely for the next movement to be a follow through to there. Stop will get hurt either way. So in a case like this, it makes more sense to have stop as refined as possible. I leave it a little bit of movement just for spreads. You know, if we get high in the zone, I don't want to get stopped out by a 1 pip spread. That would suck. But that's pretty much all we would need to do in terms of stop losses. I've just had to make a quick jump to trading view. I was on FX replay, but it ran out of data because I'm filming the video too close to have taken the trade. Just a quick recap then. We have a higher high, higher low, higher high, break of structure to lows. We're now on the 5-minute. We've identified our 5-minute supply zone. We've identified our imbalance, and we are now ready to start placing an order. So here's what I did. Entry on there, stop over there, and then our target, initially, I had prepped down to take into one of the demand zones we were looking at, which, if we jump to the hourly again, to highlight that, was going to be down towards this first area. So this would have been around a 7.8% trade, okay? If we go back down to the 5-minute then, order was then placed. It was pretty late, about midnight, and then executed the order about there. And then I just left this. And when I came back, what we'd actually done today or over the night was create a larger impulse to the downside, which again is fine because we still have the imbalance left open. We also prepped up something else nice as well, which was the formation of some equal highs. So 1, 2 equal highs there. Equal highs are basically areas in the market that look like resistance. We know that there's going to be selling under these levels, stops above. It creates a pool of liquidity or orders. We expect the market to then take this level out, which adds more weight to the execution and entry that we have prepped. So drawing this across, today's price action led into a nice entry. There was a push up, pretty perfect tap into this 5-minute supply. And then from there, we had a 0 drawdown trade after this small little push in. And the trader simply ran all the way down towards the targets. Now, I closed the trade a little early. I drew my stops in, I drew my target into around this level. I figured, look, we're looking at around a 6.4R trade here if we get that tap in there, all right? I ended up closing the trade a little bit sooner than that, just in around this price area here. And then that closed me at around $7,000, which is around a 5.5 to 5.6R on the trade that I took. So yes, I closed it a little early. I don't know, maybe I got a bit of trauma. I think closing trades early when they start to push back on you, when you're this far into profit, is generally okay. The risk you don't want to take or the mistakes you don't want to make is closing trades at like 2R or 3R or anything like this. If we're really close to target, my rule is if we're past 3 or 4%, I will happily early close. I don't try and force early closes, but I'm happy to lock it in if we're looking at a 5% or more profit and we're this close to the target. So that's pretty much the full trade. A very simple setup. Now, in the end, the trade did run. I could have got 7 or 8 or 9% out of it. So a little bit gross that I closed it early, but I'm still happy with the profits that I made. And yeah, that is a very simple setup right there. Confirmation entry, conditional. We showed the big picture narrative. We're just running this into buying zones, okay? And then simply waiting for the pullback into supply, execution there, targets lower. That's how it's done. Very simple stuff. So that's it. A stupid, simple, narrative-based trade. It's crazy simple, using pretty much nothing but market structure, imbalances, and supply and demand, with a little sprinkle of liquidity in there as well. It shows the top-down flow, and I sent this trade out to my insights channel before I took it. So if you want to get access to my analysis, it's not a signal channel, but it's a good way to learn and find endless opportunities in the market from my mind, then hit the top link in the description and join the insights channel. It's going to benefit your trading, and you'll also be able to join me on trades like the one I've showed you today. So that's it for this video. Hopefully this provided some value. Thank you for watching, and I'll see you in the next one.